the Canadian dollar. Here's pound CAD as well. And you can see there's a theme here, big candles across the board. And you might be wondering, what causes this huge spike in price in regards to CPI? Like, what would get the market to move like this? Well, let's go take a look at the number together. So here are the numbers out of Canada. Today, we had CPI. Of course, it's huge when it's in the US. It's also very important to Canadian monetary policy as well. And you can see pretty much across all the readings, trend, median, and month over month CPI, we had red numbers. And red numbers indicate a big slowdown in inflation in Canada. Now, not only is it a big slowdown, this is a huge slowdown. They revised the year-over-year number down from the previous one. They also came down year-over-year trend and median significantly, right? From the expected 3.3 down to 3.4. And these are big drops from the previous round of inflation reporting. So this is a huge swing in outlook for the Bank of Canada. In fact, what does this tell you about the Bank of Canada? And what does it tell you about gold? I'll tell you what it tells you about gold. It's actually positive for gold this morning. Why? Why is Canadian CPI coming out cooler than expected? Why is that positive for gold? Here's why. It's positive for gold because central banks are like a herd of buffalo. I talked about this in my streams many times, but central banks around the world, they typically, mostly I'm talking about like Western central banks, like the Bank of England, the Bank of Canada, the Federal Reserve, they tend to move together. Not always, but generally speaking. So to see from the Bank of Canada here today, or to see from the Canadian inflation report that there seems to be a slowdown in inflation, or not even seems, there is a slowdown in inflation, that is going to indicate that the Central Bank of Canada might have some more pressure to go ahead and start cutting rates, or some more leniency, I should say, to cut interest rates. And if the Bank of Canada is cutting interest rates, it calls into question, what about the Bank of England? What about the ECB? What about the Fed, right? What we see is that if we see a trend start where, a couple central banks, what if we get from the Fed? We're still on course to cut rates. That narrative is going to be very positive for the price of gold. Okay, so if you're somebody who's watching gold, this inflationary number matters. Even if you don't trade CAD pairs, CAD CPI here this morning is moving the markets, moving gold, because investors, traders, participants in the market are saying, okay, inflation's coming down in Canada. It could lead them to cut rates sooner. If they cut rates sooner and the other central banks get the idea, like, okay, well, Bank of Canada's cutting rates, let's cut rates. If it becomes a theme, it's very positive for gold. Remember, rate cuts are wonderful for the price of gold because it weakens currency, it weakens, and which of course in turn then strengthens gold, right? Nick, do you think the banks forecasted for the CAD news to be bad? Because I've noticed the banks have been shorting CAD very hard for the past 2 weeks of COT data. That's a good question. Let's go take a look. Let's go look at the COT data. I'm curious. So the Canadian dollar overall on the CAD here is pretty short biased from institutional money. And as you mentioned, you're right, they have been shorting the CAD ahead of this event. Really interesting, because if you had made that move, that was obviously a very, very intelligent move, considering now the Canadian dollar is dropping in value. If you were short the Canadian dollar or buying other currencies against it, right? that would have been a very positive move for you. So do I speculate that like banks are or hedge funds are anticipating inflation to come down? I kind of do. Yeah, like fundamentally that's been a theme already in Canada. So we're seeing more of it today, right? Canadian inflation has been missing a couple different times, or like lower than expected a few times here. So yeah, I think that the trend, there's no conspiracy here. There's no like, oh, they knew it was going to be bad. It's, and you said it well, forecasting that it's going to be bad, and or not even bad, just cooling inflation. That's not actually bad news. That's actually kind of good news for the Bank of Canada, right? Because again, their inflation problem is eroding, and that's good for their kind of situation, but it's not so great for the Canadian dollar strength.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Again, a weakening currency, but also strengthening in gold. I think this is really kind of an interesting story for gold today. I'm still in my 2 positions. I took 1 trade back here, a second trade. I'm still just like break even. This thing has been, it's kind of really calmed down. Gold has, its daily range has gone from massive swings to really calming down. But for those of you guys who are watching gold, I have a really simple trade management plan on this one. As long as we stay above this support level, I'm staying in my longs. But if we break through the support level, in fact, if we take out these wick lows, I'll be basically stopping out for a profit. Because again, my entry is back here. My second entry is here. So I would take 1 very small loss here and a nice winner on this one. So it's a good spot to be in. And now the question is not like whether or not I make money on these trades. It's how much money will I make? How much money will the market allow me to make? Because if we push off these lows, let's say that the gold market continues to rally from this, I may get a chance to tighten on my stop loss in the coming days if central banks, and it's really a theme of this week, are central banks going to be more accommodative, it's not a word, accommodative, I don't know, accommodating, that is, so there it is. They're more accommodating to cutting rates, etc. It should be good for the price of gold. But if they are not, if there's pushback, and the big one is the Fed tomorrow, there's pushback on that, it's going to hurt the story for gold tremendously, because rate cuts are the story for gold. If you're going to get rate cuts, that's going to be positive for gold. If you're not going to get them, or it's going to be some time before you get them, that's not positive for gold. Quick look at the S&P 500 pulling back here today. Yesterday had a big pop, and I think that this is just consolidation ahead of the big event this week. The big event being, of course, the Fed, right? What are they going to say? How many rate cuts are we expecting? Are we expecting rate cuts? What's the reaction to all this inflation data that stayed pretty hot in the US? That's what the market's looking out for. Market's been trending up beautifully, really, really strong upward trend. I'd be very curious to see again how we react to this level if we get some news from the Fed that's not so wonderful. Meaning, if you get something more like the Fed is not going to cut rates 3 times, perhaps they're going to cut rates twice. Some people would argue it's not going to kill the stock market. It's not going to really hurt the stock market because this trend is unbeatable. The AI trade is so strong and it's not super rate dependent, which is kind of true. I mean, it's hard to deny. The bulls have a really, and I am a bull. So let me clarify. I am bullish on the indices. I've just been looking for a pullback, and I think that it is still appropriate to see a pullback if we get from the Fed this week, if we see pushback on rate cuts, right? from Jerome Powell. If he's like, yeah, we're not happy with inflation still staying sticky, you could very well see a bigger pullback in the S&P 500 and still remain overall bullish, right? So I think that there is a possibility we see a pullback this week. If we do, I'll probably be looking to buy the dips on bigger pullbacks. But I think we're just due for one. We've gone several months without a 5% pullback on the S&P. I've made this point many times, but the last time we had a 5% pullback was October of last year, right? October of last year, we had a pullback, but since then we have not had at any point, take your pick, a 5% pullback, which is very rare for the indices. And it makes me a little bit nervous. You can see there's been no 5% pullbacks. It makes me a little bit nervous because indices pull back 5% frequently. So for it to never have happened in that period, you know, to chase up here, in my view, is dangerous, because suddenly you're going to get a 5% pullback at some point. Might be now, might be later, but I think that you wait for that pullback. In my personal view, I'm waiting for pullbacks before I really touch this. When I go to the top setups page and I consider, by the way, I added these cool things, sentiment, I consider the technical readings, and I look at the economic readings, right? If I don't see confluence amongst these things to get me into a trade, I'm not going to force a trade, right? So under the sentiment section, we have things like the commitment of traders data, retail positioning. Under the technical side, we have seasonality and trend momentum, right? And then under the economic readings, we have everything from GDP, PMIs, retail sales, interest rates. The Edge Finder considers all these things. And so if there's nothing for me on, let's do indices really quick. Let's go by category. We'll select indices. So if there's nothing here other than the DAX is looking bullish, but everything else is neutral, right? So until we get a strong enough reading, my system tells me no trading these things yet, right? Wait for confirmation. And where are we not getting confirmation? Well, we're seeing some slowdown in the economy. You can see some red over here under service PMI, GDP numbers. There's been some cooling in that. Not to mention, CPI has not been great. We've seen inflation remaining stubborn. So if you ask me, Nick, why aren't you long indices right now? I have a systematic response to you. My indicators here, which are not MACD and RSI, nothing against those things, but respectfully, I think that fundamentals are more important. The fundamental indicators that we look at, retail sales, consumer price index, how is the economy performing? These things are way more important than the MACD, in my opinion. Somebody will disagree with me, but these are things that matter way more to everyday people, and hence also the financial markets, right? How retail sales is performing. These things matter. And so for me, I can't get long indices until I get confirmations that there's something to do there. Now, the metals, we can add gold here. Currently, we only have one metal, but sneak preview for those of you guys who are Edgefinder super fans, we are in the works of adding more metals to the market. And I'm not just talking about just silver. There's some other ones, platinum, copper. We really want to add these things to the Edge Finder, which I think will be really exciting. Anyways, we're still getting a neutral reading now on gold. Now you might say, Nick, but you're long gold. I am long gold. And when I took the trade, the Edge Finder was bullish gold. So it's since then gone to a neutral reading. So I'm just trailing stops. I'm not adding new long positions to gold. I'm simply staying basically neutral and letting price action trail me out. So if we go back to gold just momentarily, I mentioned this earlier, but we can pull up the gold position that I have. My stop loss is trailed. So right now at these levels, I'm neutral. So if it keeps going, then great, I can stop. And if it reverses and breaks through the lows, I can go ahead and take profits on my position. So that's how I'm playing gold at this moment. Do you have any thoughts on the dollar yen for the requests in the audience? Any thoughts on the yen in general?
I think it was a very unusual move to see this, because the monetary easing was over last
Mm.
night when they decided to end the negative interest rates. So now we're at plus 0.1% now.
Mm.
Um, that it's an interesting move. I think that um, what could be happening with dollar yen potentially is that the dollar overall is seeing a lot more strength than I thought it would too.
Mm.
I think I think it has to do with FOMC and the fact that the Fed is probably, well, first of all, rate cuts are out of the question, and I think it has to do with the Fed probably saying that we'll see higher rates for longer, and investors are probably digesting that now. Um, Yen, on the other hand, they're only expected to have higher rates. If you look at the forecast, it's looking to be higher up until Q4, and our projections on the Edge Finder at least.
Mm.
So I'm not quite sure. I have to do some more research on this, but I think the yen is still considerably weak, regardless of this. Um, and even if we see interest rates rising and Japan's inflation rate still rising, it's kind of the same. It's not the same, but it's similar to the US. As we see high interest rates and rising inflation, that's still weak for the currency. But the dollar, for some reason, is going higher. I was going to ask you about that, um, in regards of it's still very stubborn at its level. I thought it would be sort of making its way down on weak dollar sentiment, but
Yeah, and I didn't actually. I've been out of the loop when it comes to the yen, Frank. Thanks for breaking that down because it is a weird move. They raised interest rates for the first time since I was reading just off screen since 2007, ending 8 years of negative rates amid rising wages and high inflation. So really weird that in response to that, the market here rallied. And like you, I don't know that I have a great reasoning as to why that could have happened. Who knows? But I would have actually expected the dollar yen to drop as the carry trade popularity could be under threat, right? A lot of big money parks, they do a lot of overnight swaps on dollar yen, right? They buy the dollar by borrowing the yen, and they collect a positive interest rate carry for doing that. And so that deteriorating because the yen becomes more costly to borrow is interesting. I don't know. I don't know that I thought for a second, Frank, that I was like, oh, well, maybe just the dollar had some strength. But no, it seems like it literally shot up on that actual news, which is really weird. Like I said, I don't think I have a great answer for that. But
um,
we'll have to do some homework on that and come back with a little bit more detail soon.
I think it's just yen weakness overall too. I'm I know the dollar is coming into play for this pair on UJ, um, but if
Hmm.
you look at other pairs like Aussie yen and Kiwi yen, they are up today as well.
Hmm.
So
Yeah, so it is
that's
yen centric.
I do think that despite the hike, this was a surprise hike. Um,
Hmm.
Despite that, there's still, like you said, rising wages and higher inflation. So that's not necessarily a good sign. If this can fix that problem, it's probably going to be fine for the yen. But right now, we're kind of seeing the same stagflation issue that is a potential problem in the U.S. too. I guess dovish news for CAD. Just seeing that because
Yeah,
the
it's
rate of
interesting.
the rate at which their inflation rate is falling is more substantial than others.
Yeah, yeah, and that's a big deal. I mean, we continue to see I mentioned this earlier. I relate it to like a herd of buffalo. If you know, a couple buffalo start trending in one direction, other buffalo are going to follow them. So I do wonder if, that sets a little bit of a theme here this week. And but again, you pointed out what happened with the Bank of Japan, though the Bank of Japan kind of operates in its own way. It's not really, as I would say, connected or correlated to the other central banks. Here they are talking about raising interest rates, but they did raise rates. Everyone else is talking about cutting rates. I think Canada's a little bit more of an accurate representative of Western kind of central banking trends. So I'm very curious if that sets a precedent. And also, Frank, if here's something to think about. If this week we get something more bullish for the dollar, maybe the dollar CAD is a really interesting trade. Like if you get divergence from the ECB or the Bank of England or the RBA, that's more hawkish. And then you've got Canada, which is going to probably have to be more dovish with these. This is like the back-to-back really cooling inflation number. There might actually be some currency trades on that.
Yeah, I think so too. I think the dollar in general, just against other currencies, is going to be a good trade to the long side. That's, to me, it feels like a short-term move, though. I don't really have a strong bias on the dollar. I still have this concern around what we were talking about for the past several weeks about, falling or poorer economic numbers and higher inflation, interest rates staying high. That combination is just not good for a currency or stocks. So something does need to crack, whether it be the dollar, the indices, or both. So I think in the meantime, you're going to see maybe stronger dollar, but overall, I don't think the dollar is very strong. And even looking at gold, a lot of currency pairs are moving lower that are trading against the dollar, but gold is still holding itself, which is another sign that there's still buyers in this market, even though it's run up. How far has it gone since October, or what was this, February of this year? So this was like a
that low
time.
February. That's up 10.5%, let's call it, which is yeah,
It's
crazy.
a substantial move. I think that investors are still betting on that concern coming to fruition. So gold looks strong. Oil's doing well still, and I haven't checked.
Yep, and you're long oil, right?
Yeah, I am long oil. The ETF of it, though, I'm on UCO at
very nice.
29.93.
I got trailed out of my position on that one, but I'm glad that you're still in it. That's been an awesome move there, and we'll have to see where that goes.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.